people think that it's very costly to establish or establish the trust and maintain them. Yes, it could be a little bit costly. Initial setup cost is around $1,500 to $2,000. That's one of cost. And then you have to, every year, you have to lodge your tax, and like you have to lodge your personal tax returns. So you have to do financials and things like that. So yes, one of the cons, you can say the costly, but I think benefits outweighs costs there. There are certain limitations what you can do with the property in under the trust. So there could be some disadvantages in that side, but usually they are not many limitations. When you go to the banks to borrow within the trust because you're buying property in the trust, you could be you need higher deposits sometimes. It depends how your mortgage broker is working with you. So sometimes it is you at least need 15% of deposit, or not 15, maybe 25%, 25% deposit for when you're buying the
Trust
property in the
lending.
trust and you're getting finance in the trust. Right?
Sure.
They are, I mean, certain people are worried about lots of paperwork as well. I mean, it's when you buy it in the trust, there are additional paperwork to be dealing with, you need to deal with, I guess. So sometimes there are longer settlements with the property, but these things, I think, they're part of the strategy, I guess, overall strategy.
Of
So,
course. 100%. Yeah. One of the key things that I've seen is that the losses getting trapped into the
yes, true.
trust,
I
which
was going
cannot
to
be
say that. Yeah.
distributed. Yeah, please,
Yeah,
could
so I
you
would say, yeah,
explore a
because
bit more on
that's
that?
that's the main thing, that previously the trust were not so attractive for the investment because of the negative gearing, as we discussed initially. People were buying properties under their personal name because they could use the rental losses against their other income. In past 24 months or 2-3 years, when the interest are so low, it is not attractive anymore. So trust, usually when you have rental negatively geared property in a trust, you cannot use those losses against any other income. You cannot distribute those losses are quarantined in trust, and they can only be used or can be used to offset future income. So that's the biggest on in my opinion. Other things you can manage, I guess, but yeah, if you are really looking for a negatively geared property and advantages of negative property, trust is not going to work for them. Okay, so yes, but it also helps in regards to the borrowing capacity as well. But I think we didn't talk about the borrowing capacity there, but trust
Yes.
can have their own borrowing capacity in future if you keep investing in the same trust, or especially positive cash flow property in your trust. Trust will have its own borrowing capacity, and you can safeguard your personal borrowing capacities for other things as well. So
100%.
that's yeah.
100%.
So there are certain benefits and certain limitations there, but it still can work for lots of people, lots of investors. Yeah.
And it's interesting. I hear brokers or people who are not an astute investor. You would hear them say this all the time, that buying a property in a trust reduces your borrowing capacity instead of increasing the borrowing capacity. And so the difference that I want to try and make here is that it might reduce the borrowing capacity at the start where you're going to buy
True.
because
That's
of that
right.
negative gearing. But from a long term perspective, you would see that your borrowing capacity gets quarantined and you get more borrowing capacity because trust is almost treated as a separate person when it comes
That's
to
true.
bank looking at you and looking at the trust. And so you can set up a trust in such a sustainable manner that it can transfer over generations. It can move over years and years to come because it would be self-sustainable in nature. It's recouping its own debt. It's managing its own liabilities. It's managing its own repayments, etc. And one key thing that we forgot to talk about on the pro side is the land tax side of things. And so
Yeah, that's
I
true.
know
Yeah.
Queensland land tax was a big
Thing,
thing
that's
when
fine.
everyone was talking about it. And I remember making that comment out there that, because we are talking about trusts upfront, we always tell people to understand what the land tax implications are for some of these properties that you're going to acquire. And so it's an amazing vehicle to manage your land tax, isn't it?
That's true, because there's different thresholds for personal property investment and the trust. When you buy property in a trust, there's a certain threshold. But if you have multiple trust, of course, yeah, the threshold gets increased with the different, because every trust will have their own threshold for the land tax purposes. But when you have multiple properties in your personal name, then all the assets in your name will be counted towards the calculation of land tax. So yeah, that gives
Yes.
you that was especially in the Queensland situation when they were looking into everybody's assets, say who owns what, and then if you own any property in other states, that would still be counted towards your land tax calculation in Queensland. Yeah, so that's definitely another advantage.